Welcome back everyone. This video covers the first part of chapter 4, but I'm also going to start trying to mix in more practice and review problems here that look back at previous material as well to keep things fresh. So here's the first one. Suppose your company uses a job order costing system and you looked at your company's journal and saw these two entries here. So a debit to manufacturing overhead for $10,000 and a credit to cash for $10,000. And in a separate entry, a debit to work in process for $24,000 and a credit to manufacturing overhead for $24,000. What could those two entries represent? So look over these answers A through D, pause the video here, and then I'm going to have the answer immediately. So the best answer there is B. This first one, a debit to overhead, would represent some kind of incurred or actual overhead cost. And the credit to cash means it was being paid, right then and there. So paid property taxes on the factory building, yeah, that's a good example of an overhead cost. And then the second one here, applied overhead to jobs in process at month end, that was a good fit for this second entry. We had a debit to work in process and a credit to overhead. So really that's the only thing this entry could represent, is applying overhead costs to work in process. I just want to talk real quick about some of the other possibilities. For letter A, the first answer was paid commissions to salespersons for products they sold in January. That wouldn't be an overhead cost, right? That would be a cost of selling. So some kind of selling expense account would be involved there. So that one doesn't fit. And then C, paid depreciation on the company delivery van. Well, that would work for the first one. But the second one said move jobs that were completed during January out of work in process. If that were the case, we'd have to have a credit to work in process for that amount, and then a debit probably to finished goods to indicate these things are being completed. And the last one there, D, said paid salary of factory supervisor. Well, that kind of works here. We could have indirect labor costs being booked to manufacturing overhead and cash. But the second part of that, recognize the cost of direct labor needed to support work on jobs in January. That would be a debit to work in process for sure, but the credit would not be on the manufacturing overhead account. It'd be some kind of wages payable or something similar. Next up, for the most recently completed period, suppose your company incurred $65,000 in manufacturing overhead costs. In the same period, your company ran a total of 4,000 machine hours in support of production work on jobs currently in process. At the beginning of that period, your company had estimated a total of $80,000 in overhead costs would be incurred, and had planned to apply overhead based on a total of 5,000 machine hours. So for this period, manufacturing overhead was blank, underapplied or overapplied, by how much? Again, pause it, work through the problem here, and then come back for the answer. That would be C, we're underapplied by 1,000. So first off, we want to keep in mind that whether overhead is underapplied or overapplied comes about by comparing actual overhead, 65,000 in this case, to total applied overhead, which we don't know yet. Okay, we don't care about that pre-period estimate anymore. Okay, so a predetermined overhead rate in this case would have been the 80,000 in estimated overhead divided by the 5,000 expected machine hours, or $16 per machine hour. So total applied overhead for the period would have been the $16 per machine hour rate times the 4,000 actual machine hours run in support of production, a total of 64,000. So we've applied 64,000, we incurred 65,000, so we're underapplied by the difference, 65 minus 64, or $1,000. And then finally, conversion costs consist of blank and blank. See which one of those answers best fits. Pause here, and then I'll have the answer right away. And the answer is B, direct labor and manufacturing overhead. All the costs we incur to convert, if you will, our raw materials into some kind of finished product. So that brings us to the start of Chapter 4, Process Costing. So there are some similarities between job order and process costing systems. Both systems do assign our traditional manufacturing costs, so materials, labor, and overhead, to products, and they provide some kind of mechanism, although it differs, for computing unit product costs. Both systems do use the same manufacturing cost accounts, So we do have manufacturing overhead account. We'll have raw materials account, a work in process account, and a finished goods account. And the flow of cost through the accounts is basically the same in both systems. So we're going to make sure as we look at examples, we really emphasize where those differ. And there are some differences between the costing systems more generally as well. If you think back to chapters 2 and 3, job order costing systems were most appropriate when companies were making things that were unique or specialized or custom ordered and those types of things. Costs were accumulated based on the individual job, representing probably a customer order, right? And unit costs were calculated by job on those job cost sheets or records. In a process costing system, costs are accumulated by department instead, by these processing departments, and unit costs are computed by department as well. And these type of systems are more appropriate if the products being produced or the services being provided, if we want to extend it to service organizations, are one and the same. Like units are identical, sort of mass production of things that aren't different customer to customer. So these processing departments that I alluded to a minute ago, really just another way to describe any unit within the organization where some kind of manufacturing costs, whether it's materials, labor, and or overhead, are added to the product. Now, the general assumption is that the activities performed in any particular processing department are done so really uniformly on all units of production. Again, we're talking about products where one unit to the next is basically indistinguishable. So my favorite example is Coke Zero. I love Coke Zero. I buy 2-liter bottles of Coke Zero in bulk, essentially. And each individual bottle of Coke Zero, and Coke makes, hundreds of thousands of them or millions of them a day, is no different than the next, right? These things are intended to be one and the same from unit to unit. So the first learning objective in Chapter 4 was to record the flow of materials, labor, and overhead through a process costing system. Again, there are going to be a lot of similarities with our job order costing system, so we'll make sure we're extra emphasis on things that are different. So we look at this general flow, again, looks very, very similar to job order costing system. We're talking about our manufacturing costs, materials, labor, and overhead flowing through work in process as things are being worked on, being moved to finished goods as they're being completed, and then costs only hitting the income statement when units of product are sold via that cost of goods sold expense account. So in that job order costing system, we were accumulating all these things and tracing all these things by job. Right? And typically a job represented a customer order or some subset of that. Now here in our process costing systems, we're going to be accumulating and tracing these costs by individual processing department. And again, just some part of the organization or some part of the production process that does something unique to our individual products to get them further along the trail of being ready to sell. So see if you can think about this. Which of the following journal entries would you likely see in the records of a firm using a process costing system, but not in the records of a firm using a job order costing system? And this question is a little bit of a peek ahead or a preview in a way. So look over those answers and then I'm going to have the solution momentarily. So the correct answer there is C. Remember, in our job order costing system, we only had one work in process account. In our process costing system, we're going to have multiple accounts for work in process. We're going to have one for each department, each processing department. So we may be moving goods, in fact, we will be moving goods from one department to the next as each department finishes its work on the individual units of product. So like we did in our job order costing system, let's look at some examples of journal entries and T accounts and how these costs flow through our system. So for purposes of this example, assume there are two processing departments, departments A and B. And we're going to look at the different accounts and journal entries for these departments. So as in job order costing, if we're going to use materials for production, they're typically going to be requisitioned from the raw materials storeroom or pile or however we want to think about that. And materials can be added really to any processing department. So we might see a journal entry like this one that follows if we're requisitioning raw materials for work in both departments A and B. We're going to have a credit to raw materials for the total amount of materials being used. And then we're going to see separate debits to each department for the amount of materials they're using in that particular scenario. So we'll see work in process department A for some amount and work in process for department B for some amount. Again, these would be considered direct materials if we're booking those costs directly to work in process. And we'd see that flow in our T accounts just like we did before. Okay? Credit side, so raw materials getting hit there, and then the debit side of the work in process account for departments A and B, showing the use of those direct materials. In process costing, labor costs are traced to departments as well. So we're going to see a very similar entry to what we had in our job order costing system to recognize direct labor. We're just going to be extending it to account for the multiple processing departments. So we'd see debit work in process department A and department B for whatever direct labor was used in those departments, and then a matching credit to some kind of salaries and wages payable account. Could have cash in there as well if part of this stuff was paid immediately, whatever the case may be. And again, we'd see that reflected in our T accounts or our ledger. Same deal. Debit's always on the left, credit's always on the right. Now in process costing, predetermined overhead rates are generally used as well. Overhead cost is applied according to the amount, right, of that allocation base or the cost driver or the measure of activity that's incurred in the department. So very, very similar again to our job order costing system. We'd have an entry that looks similar as well, but again, we'd have these separate processing departments reflected there. So here's how the application of overhead would look in our department A and B example. We'd have the work in process accounts for both department A and department B debited for whatever overhead was applied to work in those departments. And then we'd have a corresponding credit to that manufacturing overhead account for the total. And we'd see that in the T accounts as well. Remember, for our overhead account, debits represent actual or incurred overhead. Credits always represent overhead being applied to work in process. Always applying overhead to work in process, never to finished goods or any other account. Okay, finally we have a new entry. So I'm going to asterisk this, highlight it, star it, whatever. Since the flow of costs should roughly follow the flow of physical goods, we are going to be moving costs and goods from one department to another rather than just from work in process to finished goods. So let's say department A has to do something in our example, and then department B does something, and then these things are finished and ready to sell. If that's the case, every time things are finished in department A, or every period, we're going to book a credit to work in process for department A, showing things moving out of department A, and a corresponding debit to work in process for department B, showing that those things are now in department B, and department B is going to be working on them. So this is the entry we would see in a process costing system that we wouldn't see in a job order costing system. And again, we'd see that in the T account, so the ledger, credit side for work in process department A, debit side for work in process department B. Now, let's assume that department B was the last step along the production line here. We do still need to show that whatever this is we're making, these goods are completely done and ready to sell to customers. So we'll have a debit to finished goods, just like we did in our job order costing system. And we'll have a credit to work in process for department B for that same amount. Again, we're saying the flow of cost roughly mirrors that flow of physical goods. So these things are now done in department B. Department B was the last stop. Now they move on to finished goods where they can be sold. And we'd see that in the T accounts as well. Remember, any movement from work in process to finished goods like this represents cost of goods manufactured or finished for that particular period. And when we recognize a sale to the customer, we can finally have some of these manufacturing costs hit the income statement. We're going to have a debit to cost of goods sold for whatever that is. That's the cost to the company of those goods. And a corresponding credit to finished goods to update that inventory record. And we'd see that in our T accounts as well. Again, credit side there for finished goods, debit side for the cost of goods sold expense account. That's where I'm going to end this first video for chapter 4. The next one will cover all things equivalent units of production, so calculating that as well as unit costs. If you have any questions, do please let me know.